February 2nd, 2026. Let's go over the trades we took today. The first trade, we took 5 trades today, and 1 was a loss, 4 were wins. Let's look at the momentum. We like to look at the daily momentum before the day starts, just to get an understanding of what's going on. So here, what do we see? Daily momentum. Remember, the MACD is all about momentum. We had a pivot point recently, meaning the momentum stopped. And before today started, that's this bar right here. Before today started, all we had to go off of was that, hey, the previous market day, the momentum was really starting to reverse. We had a big reversion signal come on, and then the volume also adds into this. As volume increases, we take things more seriously. So with going into the market today, we knew that our momentum was slowing down. And let's go into our trades and see what happened today. The first trade of the day was a loss. And it was an unfortunate loss. It was painful and it was unfortunate. And here's why. So right here on this yellow line, anytime you see a yellow line, that means it's a trade I took. We hopped into this trade because, look, we have a volume confluence. And the momentum on the 1 minute is now flipped in our favor. You'll notice that the 5-minute extended hours and the 5-minute regular hour MACD, the 30-minute and the 2-hour, everything was aligned. This is known as a fractal 4, and those have a very high win rate. So that's amazing that we saw that today and got to act on it. But this one hit my stop loss. I entered at the close of the candle, like always. I put the stop loss slightly below that candle. I should have gone lower, but in hindsight, you never know that, hindsight 2020. So look at this price action. It hit my stop loss, and what did it do? It literally took off in oh my gosh, that's the most painful thing you can imagine. So that was a loss. And the lesson of today, we're going to go into an earlier entry here in a second, but the lesson of today is imagine you're me. You enter right here, expecting the momentum to continue in the upside. It comes down, hits your stop loss. What I want you to consider and remember is, as this is now making a recovery, right here, we are now breaking that level that I just entered on. Okay? So entering at that level, though it's not condoned because it's not this strategy that I am operating, it can be a discretionary trade that I will do more in the future. So I entered at this level, came down, hit stop loss, came back up, penetrated that same level. That would have been a great entry. And it would have had some reasonableness to it, some logic behind it, because the 5-minute data is still expanding. We're still in the midst of a fractal 4. The 2-hour, the 30-minute, and the 5-minute are all going the same direction. This 1 minute is going in the same direction. It's a fractal 4. The only thing that's missing is a power volume bar. We just don't have a power volume bar. That came a little bit later, which happened right here. Look, power volume bar. We're basically on the right side of the momentum because we had a dip down and then a dip back up. Pop down, pop back up. So that's technically another entry as well. And that would have led to a great win as well. I didn't act on these. I just took my loss and moved on to trade other things, Palantir, which we will go over. But regardless, I wanted to go over that lesson from today, which is, man, I could have, by entering that same level, I could have recovered those losses and taken a reasonable trade, because the only thing that was missing was a power volume bar. We were in the middle of a fractal 4. This was the first fractal 4 entry right here. Why? We're increasing on the 1 minute. We get a volume spike, not a power volume bar, but a volume spike. We're on the right side of the momentum, and all of these time frames are aligned. That would have led to a massive, supermassive grand entry because the price never came back. Would have been a wonderful trade. And the next trade we took, the next 4 trades of the day were all in Palantir. And look at what happened to Palantir after hours, by the way. Look how it shot up all the way. It shot up like 8 or 10% after hours. Why? Because of earnings. That's why. So right here on yellow, this first trade on Palantir, what do you see? A power volume bar. We're on the right side of the momentum on the 1 minute chart. The 5-minute twins are giving us clarity that we can take shorts. I would not have taken this trade if the 30-minute had not broken the MACD variance yet. If the MACD looked like this at this time, at the very time that this candle happened, if the MACD looked like this on the 30-minute chart, I would not have taken the trade because there's no break in variance yet. But right here, the variance starts to break. Now the variance is definitely broken. And by the time this trade setup happens, our variance is going aligned with the trade, aligned to the downside. So I took the trade right here, entry at the close of the candle, stop loss slightly above, first profit target was hit, and then it hit the final profit target, but it took a while, it took about an hour. So that was a good win, nice win. Next trade right here, slightly later on. This was in the middle of the day, where I normally avoid trading. And all of the targets and all of the movements, everything gets diminished. It gets smaller because we're in the middle of the day. Our 5-minute data is giving us permission to take short trades at the time that this candle occurs. The 30-minute is holding strong, giving us more backup. We get a power volume confluence right here. Volume bar greater than the previous 3. We're sort of going with the momentum we started to go against, but now we're ticking back down to the downside, which is what we want. Entry at the close of the candle, stop loss slightly above. That first target was hit around that dashed yellow line. That was another win. And we have this one right here. What do you see? The 5 minutes telling you, okay, you have permission to take trades to the downside now. We get a volume bar greater than the previous 3. We're on the right side of the momentum. That is the entry. Entry at the close of the candle, stop loss slightly above. First target got hit, then the stop loss was triggered for the remainder of the position. And the final trade of the day, before this entry position of this candle right here, look at these huge selling candles that started to occur. We had a big power volume confluence, but our 5-minute was not aligned with the trade yet. It was still moving. We didn't have confirmation. It hadn't concluded yet. And by the time my entry occurred, now we do have the confirmation. We get a power volume bar. We're on the right side of the momentum. Entry at the close of the candle, stop loss slightly above. First target was hit. Second target was hit. The full stop loss never even got touched, meaning that the final target was hit. Now, how you move your stop loss after you take your 80% profit, 80% of the position you sell for profit at that first level, after that occurs, how you move your stop loss, do you keep it at full or do you move it? How you move your stop loss determines what you're going to cut yourself off from. So I'm learning right now how to manage the stop loss because I did not capture this. Why didn't I capture it? Because I moved the stop loss too far away. I moved it too close. I moved it to this red line here, which eventually was hit. But man, had I kept my stop loss at that same level that it was originally at, the trade would have stayed alive and I would have been able to capture so much. So, with all that being said, that was all the trades I took today. And I'll see you in the next one. Take care.